So a decision level, right? Let's look at the vocabulary that I have been able to come up with so far. Um, and so where I'm at inside the Discord is inside the study material tab, scrolled all the way to the top. I still need to finish typing out my definitions. I'm gonna do that, but there's gonna be videos on each one of these topics at some point broken down in a really digestible way, more short form content. But a decision level is probably, I think, probably one of the most important concepts in addition to anything that I could give or teach that people that I would say people would need to learn. Um, in my opinion, I think this is more important, either just as important or more important than my Wick Sauce entries, or like Wick Sauce concepts, because sometimes those entries can overlap with decision levels. So the definition that I have so far is that a decision level is, and I'll copy and paste this too. Um, but a decision level is the most recent internal high or low before a major break of external market structure, aka highs and lows. Secondary definition, the most recent internal high or low before an indication. If we want to get really technical, I think that my first definition is going to be the most accurate one, just depending on how people sort of imagine this or understand um, the verbiage that's being used. In order to understand decision levels, there is a preliminary concept that we need to know how to do, and that is how to track our highs and our lows. Um, we need to know the difference between internal market structure and external market structure. And I do talk about that in one of my videos really quickly. Let me go grab exactly where I talk about that because I know I sent it to someone. Um, Let me just type in search internal in my DMs. Nope. Okay, I guess I can't search messages. I sent this to, what's her name? Nope, 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 nope. What's her name? Not Kia. Hold on, wait. I just did a one-on-one with her. What's her name? J. J. So it starts with a J. Julie. I sent it to Julie. Okay, right here. So copy link. Let's come back, go back to the chat. Now, so this link that I'm about to send, this is the ICC bootcamp video. Hey, how you doing? Um, but it's time stamped. You see right here, 8,626. This is how many seconds into the video it's starting, and this is when I specifically start teaching about how to differentiate between internal and external highs and lows. And I think I do a really good job here. I probably should clip that section of the video and designate that as its own video. Um, but that is necessary to truly understand what a decision level is and what makes it special. Okay. And so let's go ahead and take this definition to the chart. So, oh, and I said I would copy and paste the definition too if you guys don't have it right here. And then I'll also just paste it in here. what am I trying to do? Am I okay? Whatever. So this is the definition: the most recent internal high or low before a major break of overall market structure. So when I'm looking at market structure, uh, let's see. I don't want to. I don't want to waste my time telling you what is not a decision level, but I know I have to. So there's a plethora of highs and lows in here. Not every high and low is important. Only some highs and lows are important. The ones that are important are the ones that exist in overall market structure. So like this one's important, right? Um, Another one that's important, for example, is this one down here. Uh, this one's important down here. Let's see, this high is important. Just off the top of my head, this one is important. This low is important. And this high up here is important, right? This is kind of how I see the market has moved. We we did this. We went from up here, down to here, up to here, down to here, up to here. And you could argue at some point we sort of paused in this area, but eventually we went down to here, uptrended to here, downtrended to here, uptrended to here, downtrended to here, so on and so forth. Um, Major highs and lows are the ones that exist at the end of trends. Let me type that out. Major highs and lows exist at the ends of trends, right? And then copy text. Boop, boop. Okay, that's how I think of this. I'm teaching you internal versus external market structure right now. When this low was created, we started to uptrend from here up to here, down to here, up to there, 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 and there, and there, and there, and then there, and then there, right? But now, if I change this color, let's just say to red, for example. Red is internal market structure. If I do my analysis based off this internal market structure, at some point this trend's going to end and we're going to have the last point created. Um, and if I only look at the internal, then I might get caught out taking a trade I shouldn't take, right? Because at some point the trend is going to end. What I like to do and what I'm teaching is that I want to take trades that exist when these trends are over. I'm looking for entry opportunities that exist at the extremes in the market, um, not the inside. But I will use the inside information, the internal information, to dictate how I'm going to enter into my trade when the time comes, right? And so that's where decision levels come into play. It's a way for me to figure out, hey, which one of these highs and lows in this overall trend is a high or a low that I should actually pay attention to? And which one of these highs and lows inside this trend, well, I don't really care. I was going to say which one shouldn't I pay attention to, but as long as I'm focused on what I need to pay attention to, everything else is obsolete. It doesn't matter to me. Concept comes from skiing. If you are skiing down a mountain, um, see if I can find a good picture ski slope. And you've probably heard this somewhere. If I am skiing down a mountain, right? And I get hyper fixated on the trees that are around me that I'm trying to dodge, then I'm going to hit a tree, right? If I'm skiing down and I'm trying to dodge a tree, I'm focused on a tree, I'm going to hit a tree. If you're focused on what you don't need to focus on while trading, you're going to take bad trades. You're going to take trades that just don't matter. You're going to be focusing on things that don't matter. You're going to end up hitting a tree. If you are skiing down this slope and you're just saying, hey, you're follow the slope and you're just going to point your skis and your eyes, and divert your attention into the direction of wherever the snow is, because the snow is safe. The snow is where you need to be. The snow is going to get you from the top of the mountain down to the bottom. Then you don't worry about the trees that are whizzing by and that you're passing. You're freaking Sean White right now. Well, he's a snowboarder, or you're like that. You're just like a really great, like you're doing what you're supposed to be doing. You're executing your trade plan. You are skiing down or snowboarding down with the same hmm, objective in a similar manner. Uh, you're getting the job done, is what I'm trying to say. Like the mission is being accomplished. Now, whether or not you can do tricks and do all that fancy stuff, that's not the point. That's where edge comes into the play. That's what sets you apart from the rest of the people, but that's not necessary to get you from here down to the bottom of the mountain. Now, who am I and what do I do for you? I, it is my job to make sure that I have come on this mountain and excavated and cleared out all of the trees that were here. Any of the obstacles that could have been in your way, I'm trying to take them out of your way to make this as easy as possible. I'm trying to I'm trying to not even show you what the tree is to avoid. I'm only trying to show you where the snow is. So if you only focus on the snow, you should have a pretty fair and dandy time trading, a very fair time sliding and coming down this mountain. Okay? I am the resort. I've created this for you so you can enjoy trading, enjoy going down the mountain with ease. And trading can hopefully become a pleasurable experience as opposed to something that brings you turmoil. Okay? So, decision levels is one of those things that does that. So, let's delete all this and just start talking about what it, let's figure out where these are in the chart. I don't even need these circles anymore. All right. So I already see one on this uptrend that I'm going to talk about soon. But the first one that I'm going to talk about that I keep going to when I teach the concept is this one because it played out very, very nicely. It's right here. I usually mark out my decision levels with a line wherever, mark it out with a line wherever the body of the candle starts. And then if there is a wick on it, like there is here, because like I said, decision levels and Wick Sauce concepts, Wick Sauce entries can overlap. This is the level, but there's a wick here. I'll go ahead and mark that out as well. Like so. Bro. Am I tripping? Oh. No, yeah, I'm tripping. Why is it not drawing what I okay. What about purple? I want green. Okay, green. I think I've messed up my green lines. We'll do purple. That's fine. All right. So I mark it up like so. Okay. Why is this important? How come I didn't mark up this high up here? It's at a higher price, Romel, which means it's a better price to trade. Why did I mark up this high? Why didn't I mark up any of these other highs up here? Because they are not decision levels. What makes this particular area where the purple box is a decision level is the fact that at this high, the market made a decision to break major structure. What is the major structure that was broken? The lows at the very bottom of this uptrend. It broke lows that were responsible for higher highs. That's the major structure that was broken right here. Now, so that's part one. Part two, I don't really type out in the definition, but this is important. Part two comes into play only when you have a series of consecutive candles that broke the level. If if price came down and it didn't come straight down through, if it came down and it did a little anything and then broke, this is no longer a decision level. What would actually be the decision level, it would be all the way down here. Because now this is the last, this is the most recent internal high or low before my major break of structure. So that's a very key point. It has to be clean. For the sake of showing you what is not a decision level, let me see if I could find one really quick. Uh, dun, 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 uh, dun, 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 dun. Let's just I see one, but hold on. I might just use that example. Bear with me. Okay, this right here, right? This is not a decision level, right? If you go in here and you mark out this low, and you're like, oh, well, this is the higher low, and yeah, you're right. This is the higher low. Um, and then yeah, we went and we broke this high up here. Okay, well, let's track this. From this low, what was the highest price that price could go to before we had a bearish reaction? It, we went here, bullish, 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 neutral, bullish, bullish, bearish, bearish candle. It happened right here before we broke the high. Yes, it is a higher low, but this is not important to us. This is nothing significant happened here b- based off this low being created. We didn't go and break any crucial market structure. We didn't make any crucial decisions. Yes, it led to it, but we didn't make any crucial decisions immediately after the formation of this low. Therefore, I don't care about the fact that it's at a lower price. You know, it could be a more attractive price to get into buys. This is not the low that resulted in the move in the break of structure. So which one is? The one that is right here. This is the very last, my definition, the most recent internal low before a major break of overall market structure, an overall high. This is my overall high. I can tell because this is where the uptrend ended. Everything I'm saying is coming back full circle. So if this, if we went from this structure all the way up to this structure, the uptrend that got us there was here, 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 just a whole bunch of price action all in between this. And we uptrended, even flashed down here and kept going up, right? That's our internal structure. And so the reason why that is our external high is because that is where this uptrend ended. How do we know the uptrend ended here? Because the market came down below one of the lows, one of the internal lows that resulted in these highs being printed to begin with. Okay. So that's why this is a crucial high in the market. I'm not just calling it that. It is that. Overall higher high relative to what higher high? This one. The last higher high that was made from the last uptrend that we experienced here. So now this is external market structure here. Okay. This is the overall price movement. We did a bunch of stuff in between. That's internal. This is what happened. The trend started here, trend ended here. Trend started here, trend ended here. Trend started here, trend ended here. Okay? I hope I'm driving that point home. So, therefore, now when we look at this, this is the last. I'm repeating myself for a reason because it just I want it to click. This is the most recent internal high, or no, this is the most recent internal low right here before a major break of structure, before a break of external structure, before a break of an overall high in the market. So, how am I going to mark this area out? I'm going to put my line where the body of these candles start. I have a template called decision level, so I know why I put that line there and I don't have to guess about it in the future. Oh, what is this line for? It's because it's a decision level. Now, there's a wick below it. So there's tolerance. There's a margin of error. There is some space that price could sell down to that still keeps this overall low in the market valid. As long as we don't close below it, we're bullish. So how do I mark this up? I have a template that says wick. Dotted line, bearish. No, we're bullish as long as we close above that wick. Bearish as long as bearish if we close. Wait, hold on. Let me repeat myself. We're bullish if we close above the wick. Bearish if we close below. This candlestick has a wick on it and it rated all the way down, even below it. That's okay. The candles did not close below this wick. Therefore, we will always remain bullish. The fact that we came down and closed back above it, that's great. On the 1 hour chart, I have a 3-bar play. What is a 3-bar play? 1, 2, 3 candles. I teach this too. Candlestick patterns can be your friends. You see how each candle, the closed inside or closed above the low of the previous and got weaker and weaker. Each candle closed inside the low of the previous and got weaker and weaker. On this decision level, with the Wick Sauce trade, Wick Sauce overlap, you clearly have an entry with this bullish candle close. And then if you want to go down to the 5, you will see the price action clean itself up. Where the heck is it? Super far. You'll see the price action clean itself up. Okay, this is the origin. All right. I mean, I can probably see it on the 5, so I can barely see it. But this is how we played out. Cleaned itself up, closed above, confirmed support here, and continues to buy. Maybe on a 15-minute chart, I might can see it as well. I can see the structure yet. So do a little bar replay. And this is how we take these trades in the moment, right? We go right down to the bottom side of that wick, close back above it, or bullish order block. Inside the wick, we have market structure inside the wick that we can take this trade based off of. And so at some point, we know that Wick Sauce entries teach, hey, a close above this wick, that's an entry. We have multiple things overlapping. Decision level, wick, the candlestick pattern on the 1 hour chart, bullish order blocks on the 15-minute. You know, we just know that this is a buy that we should have taken. And then you capture, if you're trading futures, this is a great strategy. Gets you in at the right time, take your buy, make your money, get out. If you're trading Forex, it could potentially give you a swing trade entry or a nice. It'll start off as a scalp, turn into an intraday trade, and then turn into a potential swing trade if the market conditions work out. Now, what else do we have here? Overall ICC, where this is your indication. This is your indication of the break above this overall high. Now you have your correction occurring at your decision level. We're about to break this right here. We have multiple strategies, multiple confluences, multiple reasons to enter, candlestick patterns, decision levels, wicks, everything lining up at the same time. Take your buy. Where does your stop loss go? Where sells would trigger? Where would sells trigger? Below my wick. That's my stop loss. Enter into this trade and we make the money as we go up, right? And this ended up being a pretty nice win. We was up 500 bucks. Our risk is only 80. This is more than a 1 to 5 risk to reward, right? We actually didn't even experience any drawdown from the time that the trade actually executed at all. So using this by following the snow, I'm telling you what you should be looking at and what you should be focused on while you're trading to make it as easy as possible. We're not looking at any of the other stuff that's going on. Just this is where the decisions to either buy or sell should be made because the market told us that. They told us at this level, they made the decision to break above the previous overall high, which was the high of this uptrend here. So it's rocket science. It's not rocket science. We're just gonna take that trade again as long as the area stays respected. And if it doesn't stay respected, then our stop loss is pretty tight. And then what can we do? Probably get into sells on a break and retest. No problem, right? So this this not a decision level down here. This low, this higher low back down here just didn't matter. What did matter? This one. Why? I watched the video. Okay. So going back here to the example that I tend to show, Hold on. Someone said, when you get the chance, can you send the candlestick patterns? Well, yeah. I mean, it's in the it's in the hold on, I'll just copy and paste it. All right. So that's decision level. This is an example of a decision level that was overlapping with Wick Sauce concepts occurring at an overall ICC trade entry. Just a lot of confluences here at this particular decision level, right? They occur all the time. I'll put it like that. Um, and some are stronger than others. Whatever. But you want to get into a habit of trying to scope in and find these internal highs and lows. That this is how we're understanding which of these internal structures was important. This one was not important. This one was not important. This one wasn't important. None of these highs and lows at all in this uptrend were important except for this low. So this decision level concept is helping you track which one of these internal structures you need to mark up. Um, okay, so now let's go back to the original example that we were marking up here. This is a decision level, right? And what occurred here was that we see that market broke. Now, how do we trade decision levels? I just showed you. We take them in the direction that they were created. When we come back to them, if as long as the low here isn't broken, or in this case, as long as the high here isn't broken, we take the trade in the same direction in which they were created. History repeats itself. That's not only true for just life, but true for trading as well. And so this is the first time that we have come back to this level. What are we going to anticipate will happen? We will anticipate that sellers will kick back into the market because that's what they did here. Regardless, like the only way we're going to be bullish is if buyers closed above this price. Since they did not do so, this decision level did not fail. This decision level did not get inverted. So this is a selling example. This is a buying example of what happens when a decision level does not fail and it stays upheld. Okay. And this is how we typically take these trades. Um, if it'll let me, hopefully I can do a 15-minute chart. Okay, yeah, 5-minute chart is too, they don't have the data. So here we have the decision level as well as the wick that overlapped it on the 1-hour chart. And once again, we have right here, we see the rejection. We see it so clearly. Went to the top side of the wick, came back close below this level. This is how we know we're on to something good. So at this particular time, during New York session, this could have been a nice sell, right? The next day, yep, this is the next day. We came back up to that level again, and buyers tried to, we were creating some higher lows. We broke some internal highs, but we did not break the decision level. We didn't break and close above it. Sellers rejected from inside of it. And then here, yes, we have a 3-bar play, but this 3-bar play is a little different. Remember how each consecutive candle got weaker and weaker? Well, here, each candle got stronger and stronger. and we closed below the buyers that were trying to take price up here. Buyers are failing. What do? Sell that if we didn't already. Ideally, your entry is supposed to be at the level. That's the whole reason why we're pointing it out. That's where your entry is supposed to be. It's supposed to be at that level. So that's why I tend to enter into my trades blind at decision levels in case they do in case they do get upheld for two reasons. So I can have a really, really attractive entry, and so my risk can be as little as possible. Because where's my stop loss? It's right here. So I could decrease my risk. Even still, this is a great timed entry, and there's nothing wrong with this. So sometimes waiting for a timed entry is better than the best entry price because you don't want drawdown. You don't want to experience drawdown. So here, this is a good timed entry. If I wanted the best price, then I would have wanted to enter up here to decrease my risk. So now I'm taking a 1 to 5, almost 1 to 6 trade. Instead, now I'm taking a, 1 to 2. Um, and so that's but the point is that once you see these levels pan out, or you have faith in a particular level because of how strong it was, then that I'm going to leave that up to you to determine how you want to trade this. Me, I enter up here and I let it play out. Um, is that more stress inducing? Absolutely. If you want to just wait for the trade to play out, get that bearish confirmation, that candle, take that sell, wait for price action to flip bearish and give you a break of structure, go ahead and take the sell there. It'll be a better time to entry, and you shouldn't experience any drawdown at that point. We just go straight down. But this requires you to kind of, be watching the chart, paying attention. You don't have that much time to execute. Um, but yeah, but you still had ample time to enter into the trade up here. We had, you could call this 15 minutes, another 15, so that's 30. You had about like, price was up here at this area for a total of about maybe an hour. You had about an hour to get an entry at that decision level. So if you're fearful that, oh, I'm not going to be able to like enter, how am I going to know if I can enter at that price? You have the time. Here's a 5-minute chart. You had the 5, 10, 15, 20, 25, 30, 35, really 40, 45, 50, 55, 60. You had an hour to enter into that price. Okay? So now, examples of a decision level that fails. Um, there's one that just happened on gold. Okay, just so you guys understand what I'm visualizing, I'm gonna delete this box, but this is my range. This is the top of the range. This is the bottom of the range of this sideways market. That was the trend, sideways. Okay, the last high that was responsible for the break below this market structure and the start of this downtrend occurred right here. And there's a wick on it. So this is my decision level. I've been waiting for price to get up to this level to take buys. I mean, no, to take sells. Um, I thought that it would happen when during this time. price was starting to buy back up and we were pushing up, and I was like, okay, bet, we're gonna take sells here. Instead, price took a really major detour, consolidated, manipulated below the range, and buyers gained a lot of strength by the time we got back up to this level. So it failed. In hindsight, it's clear. In the moment, it wasn't. I could have understood that perhaps taking decision level trades inside of a no trade zone or an area where the market was consolidating, because it did buy, it kept trying to buy in here. We did uptrend, technically speaking, right here with these series of higher lows and higher highs. I could have anticipated that even in this area, buyers could have the ability to uptrend again, and this decision level could get flipped. But still, even if the decision level fails, it lets you know that this is going to be the price where you execute your future trade. So here's the wick that's marked out. Then if we mark out the actual level right there, we can see current day how the price action played out. We tried to respect this right here. After this interaction happened and we confirmed some support on top of my decision level. What? This is a bearish decision level. Why are we confirming it as support? That right there should have been all I needed to know. That, hey, we are not bearish. And if anything, buys are executing now. We're confirming support here when we should be confirming resistance and selling. We're not bearish anymore. This decision level has been flipped. It's been compromised. We If we were bearish, we should have sold. I was trying to give this some time to play out by looking at this wick. And as long as we stayed inside this wick and then broke down, I would have been cool. But then we broke above it here. When this happened, I was like, all right, there's a very high likelihood that my sell setup is dead now. But I was still kind of holding on to it. And so this is an example of me breaking my rules. Okay. If I never broke my rules, there I mean, well, really there was never no, a sell setup. No. Hold on. Let me just explain. If I never would have broke my rules, there would have never been a sell to begin with, because this is the wick and we're bullish above it and bearish below, and we were closing above it. The bearish reaction wasn't as strong as it would have needed to be on the next candle. Even closed inside the range of the bullish candle, showing that buyers were still buying right here. So yeah, sellers got out the way, came down, grabbed some internal liquidity, whatever, below this structure here, creating a higher low in the market. And then on this candle, everything triggered. We broke and closed above the decision level for a second time, leaving gaps in the market, fair value gaps that were ultimately tested, right? This is the fair value gap. We came down, wicked it. Okay. It's just too many signs, and I was already asleep. I was already out the trade. Like I had took a early entry right here. So I was in profit, and after we closed down, I was thinking, okay, that was just a manipulation. It's gonna sell off. No, it didn't. But I in hindsight, everything's always clear in hindsight. I had I had like one, two, I had been warned here with this right here, the rejection to the downside, holding the decision level as support for 1, 2, 3, 4 hours, like 3 to 4 hours, that that the market was flipping, that the market was bullish. So this is an example of a decision level that fails. This one failed. Even still, we still see how we could have gotten the buys here. Now on gold, Forex, this is how it looks. For some reason, the market structure really cleans itself up on gold futures, where where it looks a little bit more clear. Price closed above my decision level. Let me mark it. Um, so price did not respect my decision level initially. So I didn't get that sort of false entry, right? What is this? I didn't get that false entry right here where it looks like it respected it. Um, and so we go up and we close above it. Now I'm completely bullish. Well, I know there's some tolerance. We do come down, but after I wouldn't have entered into any sales, I wouldn't have had a selling bias. What I would have seen is I had two consecutive bullish candles that closed above my decision level. That's not good. Um, this is the first one. This is the second one. Then I had an inside candle. And so if I saw price coming down, I probably wouldn't even want to take the sell because of how price is acting here. And then eventually we get a very nice test of support on the decision level with the break and close right above the wick, right there with a test of the wick, and then the market continued to go up. For some reason, the price action looked so clean, even on a 1 hour chart. And that just means it was that much cleaner on a lower time frame as well. For gold futures than it was for gold forex. So we get the break, tests, buy, like it's just very clean price action. Nice rejection on the 5 minute chart inside a fair value gap or the gap of this candle. Went to the 50% mark. I got to mark it out. Tapped the 50% mark. Everything was just too clean. Too clean. A order block on top of the wick, confirming the wick as a support. That's what an inverted wick sauce trade is. If the wick fails, we want to see support structures being built upon the high of that wick for the market to go up. Everything is always super duper clear in hindsight. For some reason, everything was really clear here, way more clear than it was here. Hold on, I keep clicking the wrong one. Way more clear than it was here. Still clear. We could see the accumulation. We saw it hold above that level, but we had to do a lot more work because the candlesticks and the price action, everything was just a little, it was just a little weird, a little off, a little funky for some reason. But even still, we had an ultimate test here, break and close. Um, Order block made above these highs, confirming the breakout, break, retest for it to go up to the upside. So, yeah. So, probably was a weird jump, but anyway. So, this is an example of what happens when the decision level is not respected on its first go around. This doesn't happen all the time, but yeah. Now, but going back to one of the earlier examples that we did down here, a general rule of thumb is that I never take a decision level trade more than once. What does that mean? I'm just going to chalk all of this up as like this is my um overall high region right here. And yes, it was a double top, whatever. So I'm not gonna say, okay, yeah, I would have only taken this entry and not this entry. We already know that the price action from earlier in the video was pretty nice. We saw the reason to enter into the sell, I think on the 15-minute chart. Just to recap, was right here because we had the rejection, 3 bearish candles, that all got consecutively stronger, closing below this area, and we had took the sell here. So so this was overall just a very nice double top, um, confirming the decision level as a resistance and then ultimately selling off. That was nice. What I'm talking about now is what happens when we come back up to this level again. Ken knows, and you'll hear me. Not Ken, Kevin. My bad. But you'll hear me say this all the time. I'm always talking about three, 1, 2, 3 candles, 1, 2, 3, 1, 2, 3, 1, 2, 3. It's just how this everything works. What was I showing him this on? I drew it somewhere. Was on GA where I drew this? I drew somewhere that there's no such thing as like a quadruple bottom, bro. You have double tops, triple tops, like as far as what retail traders come into the market and try to start learning, you have double tops, double bottoms, triple tops, triple bottoms. Sometimes triple tops and triple bottoms form head and shoulder patterns. It's still overall a three a test of three different highs in the overall region of the market, right? So whether you're going to do this or you're going to do this, and whether or not this is going to look like a nice support or if this is going to look like a head and shoulders. Point is that the third time is the charm, bro. There's no such thing in my experience of a 1, 2, 3 and 4 quadruple bottom in the market. It just doesn't. I don't know what that is, right? I don't know what that is. Third time, third time's the charm for a reason, right? It's a cliche in the world. It's a cliche in trading. Third time's the charm. Okay. Only the closest thing that can explain this is if the market is creating this sort of setup where we're accumulating and then we manipulate the range and then buy, or like this where we're ranging, then we have a manipulation and then we sell off. That's the only other thing I could think of where we have more than three tests. Aside from that, it's just not a thing. It doesn't exist. Okay. And so what you'll see if you go and you back test that oftentimes after the third test of a support or a resistance, the likelihood shoots up to like 80% that that level is going to get broken. Um, Especially if it starts to truly test like 4 or 5 times, then you can almost guarantee you can have a gun to your head and almost guarantee that that price level is going to get broken. It's that weak. The more common a price, the weaker it is. What makes a price common? The more times that the price has been tested. So, and I had to clear up this confusion too, for Kev. So I will count the formation of the decision level as a test. The reason why is because I'm asking myself the question, how many times have we been at this price? And this is one. This is two. This is three. Now here we are the fourth time. Now what is that? That's internal. This is the internal test. 1, 2, 3, 4. Overall, I could argue, okay, overall we've only been here 3 times now. Still. So it's like once, twice, 3 times. So However I want to look at it. It's either once, twice for the overall double top, and then 3 times here, or once, twice, 3 times here, and then now this is the fourth test. We're uptrending. I know my level is weak now. We've already sold off of it. We've priced in a higher low than this higher low down here. Market structure, right? Uptrend ended here, right? We had a high, higher lows, higher high, higher lows, higher high, then we started a downtrend. Downtrend ended here because then we started making higher lows, higher highs, and so this is where we currently are, right? And this market structure right here is higher than this one. That's why this is an overall higher low, not to be confused with all of the other stuff that happened internally. This is internal, this is external. Wherever the trend started and ended determines my external structure. Okay? Okay. So, knowing that we're in a uptrend internally, as well as making overall higher lows externally, and knowing that my level has been tested more than 3 times, technically 4 times, I'm going to anticipate that we're going to break. And at some point in the future, if and when we do, my decision level that was once my area to sell is now my area where buys are executed. And we can see that right here with the test. Go back down to the 15, hopefully the 5. Well, let's start here on the 15. We see the breakout forming here. We disrespected the decision level. We're inside the range of the wick. 1, 2, 3 candles and a nice engulfing candle. What does that look like? That looks like this. Something like this. 1, 2, 3, engulfing. Something like that. So, okay, cool. That's bullish. We break outside the range of the wick. So now what does Wick Sauce concept say? Well, I want to see that wick. First of all, I already know we're bullish because of the decision level got broken. But now here's my second confluence. I want to see the top of my wick confirmed on as a support. It happens right here. As soon as we get back into the range of where the buys are triggering here in this price action, I would want to buy. I don't really need to wait for a candle to keep closing for me to know that this is bullish. We're bullish in this range. Price comes back. And inside these wicks at that 50%, right where this trade took off, I'm clicking my buy button. I'm spamming it, right? Let's see how it looks on the 5-minute. The structure can't be more clear. Something I kept telling Kevin is that when you do get the trade, at your key levels, the price action should clean up. Look at how clean the price action is. We get a break, consecutive break, liquidity is formed. I'm not going to dive into that too much, but we get liquidity right here, right sitting right above support. Price comes down into the range of the candle. Candles get weaker. Strong candle, weaker candle, base candle, really weak candle. Buy. Back outside the range. First of all, like that's your buy. If you really want to wait. Rejection candle. Okay, you want to wait some more? 3 inside candles. What does that look like? 3 inside candles. 3 weak inside candles inside the range of a bullish candle. 3 inside candles inside the range of a bullish candle on top of my support that we've already confirmed the decision level as a support. We buy again. Oh my gosh, this isn't good enough for your buy? Okay, let's give you another 3-bar play. Tap what is this? Tap this low where the liquidity was as a support. This is your last chance to enter into this buy at a very reasonable and attractive price. but the price action cleans itself up. We can see it so clearly compared to whatever the hell's going on in here, compared to whatever the hell is going on in here, compared to whatever the hell was going on right here, compared to, I could keep going, right? The price action on the lower time frames cleans itself up and starts acting like it's supposed to, or well, not how it's supposed to, but how it starts being readable. It's readable, right? It 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 forms in a way that I can actually have comprehension. It's not gibberish anymore. It's like, okay, everything. Here's another analogy. Imagine everything else as like bad grammar, right? Like you're reading sentences and the sentences have terrible grammar. The words are misspelled. There's punctuation in the wrong place everywhere. Now you have grammatically correct sentences, better vocabulary. Everything just becomes readable, right? Um, so now the point that I'm trying to make though, and I think the point that I did make, your decision level, if it gets upheld, let's just say you didn't even capture this sell. But you know that you've spotted one and it's a key level. You know with everything within you that if we flip above this and take the sellers out, that this will be my future area to buy. So upon the initial breakout, that was a nice entry. But now if we go back, so that was a nice entry on a lower time frame. But now if we zoom out and we look at things on a higher time frame perspective, this is only a wick. I don't have any candles down here. So I might take this buy a second time. We just have to see how price plays out. Now, how confident can I be in this buy? Confidence is, in this case, low. Now, why is that? Something I went over in the one-on-one with Kev is that if there is liquidity that exists below a support, a gap in the market, expect the market to go down and grab it, right? We can clearly see that on this uptrend, let me not use any vulgar language, but price kept disrespecting sellers. We made multiple indications to the upside. So now what is this? This is regular, degular ICC, right? So now whoa, I didn't know I could paste pictures on here. That's pretty cool. Um, this is regular, degular ICC. We have multiple indications to the upside and imbalances that were created, and they have not been filled yet. If I take this buy and I know ICC is pretty good, these areas have been broken, but they have not been retested. They have not been corrected yet. So now if me as a buyer, and if I'm gonna click this buy button, or I want to get the best discount that I can get. This comes back full circle to another video that I made, which some people may have watched by now, about things being on discount. If you go into a grocery store and you see something that's 50% off or 80% off or on clearance, you're inclined to want to buy it. Right now, buyers, the market is not on sale yet. We're not below my 50% or at it. I see that my 61.8, that golden fib, is lining up pretty nice with the top of this gap right here. I got my little 70% area, which gets hit all the time. I'm thinking that the market should come down and correct somewhere in this area. And if I'm a buyer, I'm more satisfied with getting in at this low price than instead of this higher price. So this is where you start to combine strategies, combined edge. Everything that I just showed you up here, it it's it's really good. It could be a strategy in and of itself, but even with the other trades that I showed earlier, you saw how many strategies overlapped with my decision level. The decision level is simply edge. It's not a strategy in and of itself. But it's going to work well when paired with ICC, when paired with Wick Sauce concepts, when paired with Fibonacci's, when paired with fair value gaps, when paired with the understanding of all the other things that you know. I'm just giving you edge. So this is more edge. Hey, the market is not on a discount yet. So any buys that do occur, I can expect them to be short-lived until we get into discount territory. We get directly into discount territory and then we buy. That's cool. That's showing me that buyers are in the market, but then guess what? This is only my first indication level. Kev, pay attention because this is what I was showing you earlier. I'm not going to enter any buys until we reach my most desired ICC level. This was the only indication that was made in this uptrend that didn't get a correction. This one did. That's fine because the wicks. That's okay. On a lower time frame, this is already fair. This one, I need price to give me my correction below this green line, below this first level where I have my first indication made. That's my most attractive price in my opinion as a buyer. Well, shoot, we didn't even spend any time down there, but you see the point. So now if I go down to a lower time frame, 15 minute, dang, we probably missed that entry. It was such a good entry, but it comes down to that level, buys off of it. Maybe I could have probably saw it on a 1 minute. I can't even go down to a 1 minute. So let's just say, okay, I missed it. Now what do I do? Well, you just keep trading and keep trying to figure out what you're gonna do. But you see the point though. Like that's where the trade should have triggered at. Um, and then so now that price is going up, our decision level is now our main indication level. And since our internal market structure has now been validated, um, and buyers are clearly in control, they can take the market back above to new highs from current price now. There's not that much of a reason for them to continue to sell off. Now, would I take this? Maybe, but still there's three. This is a strong candle, but it's still three candles inside of a bearish candle. So what does that look like? It looks like it looks like this, three candles inside of a bearish candle. This is just happening on a very large scale. So I will expect sellers to try to fight. I don't think it's just gonna buy straight up. What is my best entry? My best entry as far as timing the market is a break above this high or the high of that bearish candle. As far as a good price, I would love to see this level used as a support. So let's see how it plays out. So sellers came back into the market. They paused. They didn't have that much motion because clearly we know buyers are in control. But now we are using the decision level as a support, closing above it. We just came down here, printed a base neutral candle. Probably would be safe to enter into my buy now. Where's my stop loss? Stop loss. I'm fearful that this might be liquidity right here that might get swept. Let me go down to a lower time frame. I would put my stop loss like below here, below this wick, just in case this gets swept and price comes down and doesn't close below this wick right here. I'd probably put it right here. And then let's monitor actively. One candle. Okay, I like what I'm seeing, but I want buyers to really kick in. Breaking highs. So when this dynamic happens, this is not bullish yet as far as the break of this high. This rejection wick has to get closed above. Price could close above my high technically, but now once again we're inside a rejection wick. Price could come back down. It needs to close above that wick now. So this is why I actively monitor my trades. There we go. So now we're good. And so that was a solid entry. Stop loss was down here. Didn't need to be because we waited. And then we're already at TP number 1. That's ICC. And where's TP number 2? We have lows right here that were broken, that were never balanced. We broke and never retested, so TP number 2 is probably going to be right there. If it hits it, then boom, it hits it, and then we eventually keep pushing up. And so that's how the trading is gonna go. When these decision levels, when they do get flipped, like they do, you still have to take a lot of other stuff into account, but ultimately it is going to be the decision or the area where your buys take place. It may not be super pretty like it was in the moment, right? When they first triggered, everything was really pretty at first, right? We inside this circle. We broke, confirmed support, everything was really pretty. Now for the overall move, still, price had to come down, fill some imbalances and all that good stuff, but still when the time was right, when we proved that we were going to go back up, confirm support, it was a really nice trade in a swing trade at that. And if we let this market play out, yeah, that was a good entry. We could have been holding that for a long time. He said, "How long can you use a decision level for?" So now at this point, so sure. So like, what is this decision level valid? Say if that's the question you're asking. My answer is no. It's not valid no more, or anymore. But I'm not gonna say it can't be a key level. Maybe, if we find ourselves back there. But as far as taking entries or based off that level, no longer valid. So a decision level is only valid the first time that it's tested, and then if it's inverted when it's broken, and then eventually for buys to accumulate off of it in the future. So how do I say this? One overall test to respect it. Never, never the second overall test. You know, and then if the overall test gets flipped, that is an entry for that day. And then when we come back below it, if we're going to accumulate, we're creating bullish, whatever, it is your zone or your area or your price where the trend should take off. You just have to make sure that you're keeping everything else into account because you can be early and, take losses. If we would have entered here, still would have been okay. Depends on how big your account is and how much you're risking. If we would have entered here, we still would have been okay. Stop loss right down here, pretty tight, no problem. But if we're talking about precision entries, people with smaller account balances, or if you're trading futures, this wouldn't have worked out for you, right? Swing traders, it would have worked out just fine, no problem. But so the entry that we would have liked to see would have been this one right here. And so yeah, that is an hour and 15 minutes on decision levels.